Welcome back, folks. Dow Industrials closed down 119. You had the NASDAQ off 25. S&Ps were off 9.5. And we have our man, Mr. Chris Gaffney. Chris, folks, is the president of EverBank World Markets. Now, as you come over to our website at TFNN, you're going to see the banner right on the right-hand side. As you hit that banner, it's going to bring up the EverBank site. When you bring that up, what I'd like you to do is hit investing. As you hit investing, go to under diversify and conquer. Go into Marketsafe CDs. What Chris and I are going to be talking about is this is a new Marketsafe. It's the Power Metal CD that is back. It has got extended to August 17th. The key features are that you only need $1,500 to open it. You can open it with as much money as you want, $1,500 to open it. Your principal is protected 100%. There's no monthly account fee. It's FDIC insured and IRA eligible. Chris Gaffney, welcome back to TFNN.
Thanks, Tom. Great to be here.
Absolutely, man. And, I walked through, the principal protection, no doubt, is a huge deal, particularly, because it seems like everything's going down these days. It's almost like a liquidity event again, really. Do you know what I mean?
Well, today we got a little bit of a bounce. This morning we were looking like we were going to get a little bounce on the metals just because they were oversold. But, yeah, I mean, there's a lot of pressure on the metals markets, and really, at some point you've got to think this thing is going to reach a bottom. And especially with the amount of liquidity that's being pumped into the markets by these central banks. And the U.S. central bank, the ECB, is now doing quantitative easing. We've got Japan just throwing money at their markets. And again, all that money sloshing around eventually is going to lead to an inflationary environment. Now, that may not happen tomorrow. It may not happen by the end of the year. But again, this is, our CD has a 5-year term, and a lot can happen in 5 years. And so I think it's a great way for investors looking to benefit from, possibly a bounce in these metals markets.
I think right now, we know, folks, okay, inside the investment business there's never any guarantees, okay? But what's so cool is that, the metals have got hurt, okay? And it's so cool that it's a 5-year term, okay? And just as you said, it's like, okay, we know that the paper is getting pushed in the market like in an extraordinary way and has got pushed in the market in an extraordinary way for a long period of time. We also know that you have the metals that definitely gold is now under production cost. So it's like, okay, how long is that going to go on? So can you explain to the folks, what's so cool here, folks, is this. This is a CD product, okay?
Right.
It's a CD product. You get your principal guaranteed, and there's no such thing of that if you're going to trade metal. So if you can just, right? I mean, it's amazing.
Right, and that's another, you pointed out it is IRA eligible, and that's why this is a great product for IRAs because, again, return of capital is as important as return on capital for IRA investments. And this one, again, is an FDIC-insured CD. Your principal is guaranteed. How the CD is going to work is every year we're going to set the price of gold, silver, and copper and establish what that increase is compared to the original pricing on the original pricing date. Those returns are going to be capped at 45% each year, and then at the end of the 5 years, you're going to get the average of those returns over that 5-year period. So we're going to average those 5-year returns for each of the 3 metals. And again, your upside will be capped at 45%, but again, but your principal is protected. And so if the metals go up anywhere between 0 and 45%, that's going to be your return on this CD.
Which is huge. I mean, the bottom, I don't know what the exact number is on a 5-year CD right now, but it's certainly not, 7.5%, 8%. Yeah. You know what I mean? Yeah, exactly. And what we're talking here, folks, is this, okay? What they do, the basket of metals we're talking copper, we're talking silver, and we're talking gold. So when you take a look at those aspects, when, like anything else, when you're buying things, when they're down versus up, and you have a longer period of time, and you get your principal back. I guess as many times as it's getting your principal back that seems to be the best thing in the world, right?
Right, and we just had a diversified metals CD, a similar structure. It didn't have copper. It had some other metals. It was a different combination of metals. But again, the metals markets were volatile during the time period of this diversified metals CD that had recently matured, and those clients ended up with a positive return, even though metals prices had dropped back below where they were initially when they invested into the CD. So there is an averaging, which also helps if the markets are very volatile during the term of the CD. And again, it's an opportunity to get into the metals markets when they seem to have some value right now.
Yes.
I mean, they've been hit hard, as you point out. I think it's a bit of a contrarian trade right now, in that I think everybody's running away from the ETFs. I know the gold GLDs are what shrank to the lowest level since 2008 as far as holdings on that today. So,
what's intriguing is that they, Andy and I were talking about this earlier. I had him on earlier the last hour, and it seems that the commodity downdraft no doubt has to do with China. But like I had said to Andy, and like there's nothing that's getting less expensive in the United States. I mean, we're not in a deflationary era. I mean, whether it's schooling, whether it's food, I mean, whether it's housing, things are going up. So it's like, so there's a nice differential there also as to what commodities are doing deflationary versus what we're actually doing here. Right.
And again, I think just for the longer term, we'll look back at these levels and probably think, boy, that looked pretty cheap. Now, can they get cheaper? Yeah, I just was speaking to a Bloomberg metals reporter this morning and talking about metals markets and how, there's a possibility when we get an interest rate increase here in the later part of the year that you're going to see the dollar get even stronger and precious metals maybe get even cheaper in here. But again, the key is what happens over 5 years. So,
it absolutely is.
It's an opportunity to get invested into what can be a very volatile market with principal guaranteed. And again, I can't stress that enough that getting into an FDIC-insured CD product that's going to have an upside potential based on metals, but which is principal guaranteed, is something that's pretty unique, and we're real proud to offer it for investors.
Absolutely. And folks, you can just come to our website and you can hit the banner. You can call 855-750-4051, or you can go to everbank.com/TFNN-CD. Chris, you have a great one, safe one. Thanks so much. And you have to act here, folks, before August 17th. So you have plenty of time to act before August 17th.
Right.
You have a great one, safe one. Look forward to speaking again, Chris.
You bet. Thanks.
Okay, thanks. You stay right there, folks. We'll be coming right back. This is Tom O'Brien. This is TFNN. A lot of numbers are coming out, folks.